Welcome back to National Report. We have breaking news for you. The new COVID-19 variant from South Africa has investors rattled this morning. The market sinking around 1,000 points. You see a live look there at the board for the Dow Jones Industrial Average. Joining us now with reaction is managing partner for Chapwood Investments, Ed Butowsky. Ed, good to see you, though we wish it was under better circumstances for the market. Want to get your reaction to this 1,000-point drop over the last couple of hours over fears of potentially another variant.
Well, I'll tell you, it's not something that was expected, but it was definitely something that people could look out and realize that at some point you're going to get another reason for this market to sell down. And the market was already very tenuous in terms of its ability to be at these price earnings multiple. And so for your viewers, you have to understand that the price and the earnings need to support the growth rate of the index. And the index right now was 31% overvalued based on expected earnings growth. So anything that came in that was a negative, stocks are going to sell down because they're not going to meet those lofty expectations. So this is, the reason it's selling down, but it's really because the market was already extremely overvalued. And this just gave them a reason to sell it down. And I don't expect this to recover very quickly. I do believe this is the first leg of a multi-step downward trend in the stock market going into 2022.
Yeah, I wanted to ask you about that. How long do you think that this will? There are a lot of people are saying that it is inflated, that the market's on a sugar high, and we're expecting to see some sort of a pullback. How long do you think that could go for?
Well, anybody who makes these predictions, looks like a fool. So, in the chances of looking like a fool, I believe this is going to last well into the summer. We're going to see consistent selling off because you have inflationary pressures that are not going away. You have oil prices that are down dramatically today because of a slow world economy brings oil prices lower. Plus, you have the strategic reserve that was just released. So you have a temporary push down on oil, but I believe oil prices are going to go back higher, which is going to create inflationary pressures, and that's going to slow the world down as well. So I just believe people should pull back on their equity exposure, try to reduce them quite a bit because, again, you were 31% overvalued. Tom, to put this in perspective, the stock market in October 1987 was 40.2% overvalued, and we saw it correct. So everyone always has a reason to say something is different this time, but I've been at this so long that I can tell you that I'm done saying something is different this time. It's going to be the same. It's going to be a reversion back to the mean, and we're going to see earnings multiples back to around 17 at some point.
I want to just point out the World Health Organization has just moments ago released some guidance coming out of this meeting. They did caution countries against hastily imposing travel restrictions linked to the new B11529 variant of COVID-19, saying that we should take a risk-based and scientific approach to assessing the new variant. We've been saying this here from a medical perspective that people shouldn't panic. This was expected. New variants are expected to happen. And the same thing also, even though the markets look like they're panicking, but there's a bigger picture here. I've always kind of likened it to if you eat a lot of carbs, and you do that race and you eat a lot of carbs, at some point you have a lot of sugar. At some point you're going to crash. You're going to come back down in terms of your energy level, and that's a lot of what we're seeing here. What is your final message for investors on this Black Friday looking at these numbers?
Well, take this as a wake-up call to pull back on your equity exposures because at this point, everybody, including my clients, have thought there's really no risk. And the risk is very apparent, and it's going to hit them in the face. And you have to pull back and get involved with not interest rate sensitive bonds. Get involved with lower quality bonds that will go up or down based on their balance sheet. And those are single B and double B rated bonds. The higher quality bonds that are interest rate sensitive you'll get absolutely no return on those. So that's what my suggestion would be is pull back on your equity exposure and maybe get a little heavy into the energy sector at this point.
All right, Ed Butowsky, Chapwood Investments. Thanks so much for your insights.
Thank you.
You just watched Newsmax TV, America's fastest growing cable news channel, now in more than 70 million homes. You can get Newsmax TV on your cable system or check your cable guide. And if your system doesn't carry Newsmax, call them, tell them you want Newsmax TV, because we're real news for real people.